Imagine launching a globally recognized brand in one of the world's most dynamic markets, only to realize your strategy is completely misunderstood. That's exactly what happened to Ikea when it entered China. How did the Swedish giant, known for its low-cost furniture, turn initial failure into massive success in the world's second-largest economy? In this video, we dive into Ikea's fascinating journey in China. How they tackled local competitors, copying their designs adapted to unique consumer needs, and transformed their strategy to achieve billions in revenue. Stay tuned for an in-depth analysis of Ikea's blueprint for success in China. Ikea is a global leader in affordable, stylish furniture, but its entry into the Chinese market came with distinct challenges. Chinese consumers, particularly the middle class, were confused by Ikea's low-cost positioning, which didn't align with their aspirational mindset. Local competitors quickly copied Ikea's designs, offering similar products at lower prices. This case study highlights how Ikea adapted its strategies to become profitable in China, while facing significant competition. Ikea launched in China in 1998 through a joint venture to comply with local regulations. The company quickly realized that Chinese urban apartments were smaller than in other markets, leading to adjustments in its product line. Modular furniture and store layouts were reworked to meet local demands, and Ikea incorporated balconies in its displays to reflect Chinese apartment styles. Despite these efforts, the first few years were tough. Ikea's business model of showroom displays and DIY assembly didn't initially resonate with Chinese customers, who preferred fully assembled products. The company's solution was to expand its product offerings to better meet the preferences of the young, urban middle class. By 2024, Ikea has continued this trend, targeting an estimated 400 million middle-class Chinese consumers, with most aged between 25 and 45, whose disposable incomes have steadily risen since 2020. One of Ikea's major hurdles in China was pricing. While considered affordable in Europe and the US, Ikea's prices were seen as high by Chinese consumers, who could find cheaper locally made alternatives. To combat this, Ikea built manufacturing plants in China to reduce import taxes and lowered costs through mass production. The company had cut prices by over 60%, driven by local sourcing and a more efficient supply chain. This strategic cost-cutting allowed Ikea to stay competitive in a market with numerous low-cost alternatives. To further engage Chinese consumers, Ikea shifted its marketing focus. The brand moved away from its traditional catalog marketing easily replicated by local competitors, and instead leveraged digital platforms like Weibo and Douyin to target younger tech-savvy consumers. Today, Ikea reaches over 100 million potential customers monthly through social media marketing in China. One of the key strategic shifts Ikea made was to adjust store locations. While Ikea typically builds stores in suburban areas in Europe and the US where customers drive, in China most people rely on public transport. Recognizing this, Ikea opened stores near metro hubs and partnered with urban shopping centers to create smaller city-based stores. This change helped boost foot traffic, contributing to Ikea's estimated $6 billion revenue in China by 2024. Sustainability, the cornerstone of Ikea's global strategy, faced resistance in China. Initiatives like charging for plastic bags and promoting renewable energy were initially unpopular with price-sensitive Chinese consumers. Nonetheless, by 2024, Ikea has continued to push its sustainability agenda, with 70% of products in China now sourced from sustainable materials and a commitment to using 100% renewable energy across all stores by 2025. Ikea's experience in China underscores several critical lessons for businesses looking to enter this competitive market. Understanding local consumer behavior, tailoring products to fit regional preferences, and adjusting price and location strategies. Today, Ikea is not only profitable in China, but also seen as a brand that has successfully balanced affordability with quality and Western appeal. Ikea's journey in China highlights the importance of adapting global strategies to local markets. If you found this case study helpful, Please like and share this video, and subscribe for more insights into the strategies of top global companies.